Yeah. In high school, I was a three sport athlete: football, wrestling, and lacrosse. And that consumed all of my time. So I don't know what your high school days are like, but I was probably doing 60-hour weeks in high school. Wake up at 6:30, go to school, go to practice, come home, after class, do the homework, and repeat. Game days and weekends were often just as grueling, or even more grueling than that. Um, so I graduated, with pretty good grades and all that. Went to Vanderbilt University, and had a kind of completely different college experience than high school experience. That without the structure, I was just like, oh, this is way easier from a lifestyle perspective than that. Since I was privileged enough not to have to work a second job. My parents paid for college, which is probably a mistake. I probably should have kept busy throughout all of that. So I had a lot of fun in college, and was on the rugby team, and I think it was social chair of the rugby club, and like in a fraternity as well. So I would say I wasn't very productive in college, but I was surrounded by a lot of folks who came from wealthy backgrounds and kind of learned what those folks' parents did in a lot of areas and that kind of stuff, and didn't really know what I wanted to do. Went through like engineering. I started off wanting to be an engineer. Then I went to pre-med. Then I went after I got a internship at Johns Hopkins, I think, to study cancer research. And that was pretty cool. We grew cells in mice, cancer in mice, and gave them drugs to see what proteins would be expressed differently based on those treatments or whatever. And at the end of it, I was like, this is really cool. We just got to, and I realized that there's 4 proteins that I tested for, and there are 180,000 at least that are expressed differently with these. I was like, okay, I'm not doing into cancer research anymore. So I switched to finance and corporate strategy in my junior and senior year, and that's how I finished with my major. From there, I got a job at Dish Network in Englewood, Colorado. And I got an internship there between my junior and senior year, and that's how I got the full-time job out there after that. And I loved Colorado, and I had a great time at that internship and loved Colorado, not really because of the mountains, but because of the rugby we have out here. We actually have one of the best amateur rugby areas in the country out here with like 10 clubs. And so I wanted to play and keep that as a part of my lifestyle. Within 3 months after graduating college and starting my job, I realized this is not the career track that I want to do. Like I'm sitting down at this desk, and I know that if I continue doing what I'm doing and I do it well, I'm going to rise through the ranks from being the financial analyst to the financial analyst 2, to the financial analyst 3, to the senior financial analyst, to the finance manager, to the senior finance manager, to the director of finance, to the senior director of finance, to the VP of finance, to the CFO. And that's if I'm really, really good over the next 25 years. And it's just like, that desk is not that much different than this one right over here. And I'm not really going to make that much of an impact. And so I kind of stumbled across the concept of financial independence. Probably if I started my job in August 2013, by December 2013, I had fully gone down the rabbit hole of personal finance and all that kind of stuff. I can't really pinpoint exactly where I found out about it, but I became really obsessed with 2 primary resources. One was Mr. Money Mustache, who is kind of a blogger with a funny name, who has a pretty, he calls it badass, some people call it different things, approach to finance where he's really frugal. And the other one was Bigger Pockets. And so my thought was, great, if I can save a ton of money and be really frugal and invest in real estate, I can retire in 5 to 7 years. And so that became my kind of consuming goal. I just started saving. Before I got into financial independence, I bought a new car. It was a Toyota Corolla, so it wasn't like a fancy, convertible or anything like that. But bought a new car, and I was like, okay, my position is I can save up about $15,000 over the next year if I work at my job, bring lunch, and do all that kind of stuff. And so by the end of 2014, which is the next, by I guess July 2014, I made 2 big decisions that kind of built up over that 6-month period and after those first months. And that was, one, I had saved up $20,000, so I was ready to do that. But first, I switched jobs and I joined a tiny startup called Bigger Pockets, where I'm the CEO now. I was the 3rd employee at the time. And 2, I think I went under contract, or right about that same time, went under contract for my first house hack duplex. And so that was really the pivot point for my career in a lot of ways. In the 7 years since that time, my duplex, I've bought several more properties. My salary began to climb steadily over the years. From I think I was making like $50,000 a year when I first joined Bigger Pockets, and it steadily has compounded to several times that today, plus interest in the company, plus bonuses and all that kind of stuff. And it hasn't been like a leap forward at any point. It's been a steady kind of compounding. The business gets 1% bigger every day, and raises come like this. And then one day you find yourself selling the business. And I guess that is a leap. That was another big turning point I'll get to in 2018. But in that period from 2014 to 2018, just took on more responsibilities at the startup, bought more properties, took every extra dollar that I was saving and invested it into stocks steadily, month by month, week by week, for a period of 4 years, and just took on more and more responsibility. In 2018, the founder of the company, who I have, did and have, I think, loyally served both his personal interests and the interest of Bigger Pockets, asked me to sell the company for him. And so that's where we underwent a process and brought on our new partners, which are McCarthy Capital. It's a private equity firm. And so that consumed most of my 2018. And from that's a huge career moment when you are named president of a company and asked to bring on new equity partners with that. And so that was a big day for me, and really kind of finished out. You can kind of be like, when is FI? When does it happen? It happened sometime in 2018, probably before we sold. And then it was just like exclamation point at that point. And so now I find myself in this position of having a large number of assets across real estate, Bigger Pockets, stocks, and those types of things. And, I'm here in this job running the Bigger Pockets business, I guess. I'm loving it. Is that what you were looking for, Dan? Or did I go too far?
That was perfect. Yeah. And what a great journey. I think, I've heard you talk before on different podcasts about, is that path repeatable? And maybe not, because not everybody can get into a startup at the ground level, and not just any startup, but a startup that has so much potential and can grow. A lot of that growth, I think, is due to you and the work you've done. But not everybody has that opportunity. But all the other things you've done, saving money, creating extra income, house hacking, I think absolutely are things that all these young people can and will do. I think they all will be doing this stuff.
Well, I think, Dan, on that point, absolutely, it's not repeatable. But what I think is you have to think about is that if you want to maximize your potential in life, I think there's like two conflicting things. One is you want a formula that is going to win, right? And that's like the whole save 10% of your income and put it in a 401k and be consistent and all that kind of stuff. And that works, and you need to do that. But you also need to allow opportunity to be seized at the same time, right? And so that's, I think, like if I haven't really been able to articulate it like that until very recent, the last couple of months. But, because we actually were talking to a couple on one of our podcasts, and they were like completely at odds. She wanted to save and invest, and he wants to start businesses. And really, you have to do both, I think, in order to maximize your chance in life. You have to save consistently and invest consistently and all that kind of stuff, and build a position of flexibility so that when the moment comes and Bigger Pockets is hiring and you're a big fan of them and all that kind of stuff, or whatever it is that you like and are doing that, you can say, you know what? Yeah, I have $20,000 saved up. I only spend $2,000 a month. And if this company goes bust, that's fine, but I'm going to regret it in 30 years not taking this chance. And I can take it because of my low spending and my flexible financial position in a way that the other guy can't, because of the way that he set up his life, right? A lot of, perhaps some of your peers will go on, some of your best performing peers, the smartest kids in your year at school or whatever, are going to go out and they're going to get a job on Wall Street and make a ton of money, but they're going to spend all of it. And they come out of it with no assets outside of their 401k and 1 month cash reserve. They can't take a step back and start a business. They can't go from $180,000 a year to $50,000 a year or less or nothing to kind of come out the other side as an entrepreneur with that. And so that's a framework you're going to have to just deal with. And I don't know how to give a right answer with it, but that's something that I think if you can apply both the system and allow for the opportunity, that's probably the best bet there. Although that opportunity may also never come, which is why you need the system. So anyways,
I think that kind of plays into that, the saying, the harder I work, the luckier I seem to be. You were working pretty hard, Scott, at setting yourself up in that situation of a frugal lifestyle, saving lots of money. And then you had this opportunity come to you to jump on board with bigger pockets. Like you said, if you wouldn't have worked hard to make that opportunity one that you could take advantage of, you didn't have $20,000 saved up, for instance, you didn't have a frugal lifestyle, the opportunity would come and go. You would say, wow, that would have been a great opportunity, but I just am not in a position where I can do it. It's amazing to me that the harder you work, the more opportunities come. And then as you take advantage of those opportunities, it begins to snowball and things just take off. Things literally just take off. And I think, your story is a great example of that.
Yeah. Well, I think also it's not hard. It's not just hard work, right? Because lots of people work hard all day long, every day, but their path gives them no possibility to succeed, right? So like if I had continued working very hard at my first job, I would have gone from 50 to 52,500 to 56,000 to 58,000, right? Over a period of 3 to 5 years with the hard work. So I think it's that intersection of, yes, hard work, self-education, networking, and your financial position. I think you can't ignore the financial position as part of that as well. And if you can build up those savings or that nest egg, that's when you can, I don't know, there's probably more to it than that as well, but there's probably, I think that hard work piece is always one that, because you look at other people, you're like, that guy doesn't work that hard, but yeah, it has this immense thing because there's something more to it than just that hard work piece.
You're right. And a lot of that is mindset too, just believing that there's an abundance for everyone out there, believing that you can achieve everything you want. And then networking is a big part of that too. These are all things that we kind of chat about inside the mastermind. What I want to go to next, Scott, and you've kind of already jumped into this a little bit. One of the questions I know that they would all like to ask you is, as someone who is, maybe 10 years older than them, in a really good place, you're financially independent, you have lots of great investments, what advice would you give to these young members? What do you think they should know now that maybe you wish you would have known at 16, 17, 18 years old to help them? Because they're all definitely on board with everything we're talking about. What advice would you give them to help them succeed?
Wow. I mean, there's a million components of that. If I'm going to pick one, I would say, do some kind of goal setting. Just embrace the cheesiness of the goal setting world on Google once you go down that rabbit hole and be like, okay, if I'm like, there's that whole thing about that. I think it's a completely fake made up saying about like, oh, the Harvard graduates who have written goals make this much more than the graduates who have goals but aren't written, and this much more than the people who don't have goals. I really think, I don't know if that's complete true or not. But for me, I have consistently, since graduating college, set down annual, quarterly, weekly, daily goals, and I refer back to them almost every single day and do that. And so not for very long, more than a couple of days, will I be completely off track and not refocused back on what I'm trying to do. And sometimes it's just 5 minutes. Like my biggest goal is I need to hire for a senior leadership team position. Nothing I can do today beyond the interview I had this morning. So it's 5 minutes, follow up and move forward, right? With that and wait for the next interview. But as long as I'm always making that next event, that is the most important thing, happen a little sooner, that seems to accelerate progress with a lot of those things. And because I'm doing that, I have habits in that daily log that I try to stick to, like reading every day about something that is practical and relevant to my life, or making a connection, or whatever it is that you think is important. Everything else for me seems to stem from that one activity and keep me coming back into the area that I need to go whenever I start wandering a little bit.
Awesome. And yeah, that question is a tough one to answer, Scott. Sorry about that. What advice would you give them? Because there's so many different things to talk about. when we get to the question and answer, I think they'll be asking about more specific things for you to touch on.
Here's another way to answer that, because I'm having fun getting going. I know you're about to ask another question, but if you look at things successful people do, you could probably make a list of like 20 of them. And it's like work out, eat healthy. Here I am eating goldfish. I don't know if I counted this at all. But work out, like eat healthy, network, read, set goals, meditate, whatever it is, right? There's gonna be a list of like 20 things, and nobody does all 20 of those things, or all 50 of them, or all 100 of them. So, but yeah, I think almost everybody who's going to have a successful career in entrepreneurship or build wealth early in life is going to do a subset of those, and it's going to be a different subset for each individual. So it's kind of like, understand, like, I don't get up early, right? That's just not one for that. But I do set goals and read and work out regularly and religiously and all that kind of good stuff. And so I think it's like look at those things that you think help make people successful, and pick the ones that make sense for you, and be comfortable with, like, I am just not going to do those other ones. That's probably better advice than telling you to pick one of them, which is the set goals one that I picked. Than that, it would be, make sure you're doing enough of those that you can't help but be successful, but not try to force the ones that just don't work for you.
Awesome. Great advice. And I'm not a guy that loves to get up early either. Meditation works for some people, but not all. And the way you meditate works for some people and not all. There's just so many different ways.
This stupid thought just keeps popping into my head whenever I try that, unfortunately. So, but I know it works for a lot of people, but it just doesn't work. Yeah.
All right. So what I want to do for the remainder of our hour together, about 35 minutes, is just do Q&A. That tends to go really well. I know they have a lot of things they want to pick your brain about. There's so many different topics they might bring up. So what we do, Scott, I think what's going to work best for this meeting is if a member has a question, they're going to virtually raise their hand. And guys, if you don't know how to do that, just put a comment in the chat and somebody will answer it and tell you how to do that. So you're going to see, if you're looking at the screen, Scott, you'll see some hands up, and you should be able to see their name. Just start at the top, call their name. They'll ask the question, you answer it as best as you can, and we'll just see how it goes.
All right. I got Wyatt in the top left for me.
Hey, Scott. I recently met with a local real estate investor, and we hit it off pretty well, and he was talking about how he's looking to expand his team. So I was thinking about coming in with some social media marketing strategies, but I know that you said that you were the third employee at Bigger Pockets. So I was wondering if you had any other strategies or what you use to give value to Josh Dorkins and things like that.
Well, what I would say, it's almost hard for me to remember the hiring process because it's a little strange, and I kind of fanboyed over Josh because I listened to him on the podcast and all that. It depends. I mean, I would say what does the person need, and to volunteer first and foremost for the activity set that they need. But once you get the job or whatever, or if you can in the interview process, sticking your hand up for every operational component that you can early in your career is probably a good idea, or at least that's what I did. And there was no return expected from that. In the 7 years I've been at Bigger Pockets, I've never asked for a raise once. I don't know if that's probably shame on me. I probably could have, done a little better to some of those things, but just by sticking my hand up and going after every opportunity and saying yes and tackling the hardest, dirtiest, but most important problems of the company, that's kind of how I think I got more and more responsibility handed to me. So I'm only partially answering your question about in the application stage, but if you can make that intent clear and known that that's what you're intending to do, like, hey, you're the CEO, Mr. Investor, I'm not here I'm here to learn all the ropes, but when you need coffee, I'm going to go make you coffee because it's either your time making the coffee or my time making the coffee. And I'm here to serve that with that. And then, hey, if you need me to go build a financial model for you, I'll try it. I'm not a financial analyst, but I'll do that. I'll do a passable job after watching a YouTube video on it. If you want me to go and lead a customer support team, I'll figure out I'll go read a bunch of articles on that and put together a stab at that. any case I can, try to be a cost-effective solution to your problems. Is that helpful?
Yeah, that's helpful. It's not like a formal interview process. You mentioned that he was looking to expand his team, but definitely pulled some good things away from what you said. Thanks.
Great. Next, I have Eli in top left. I'm just going top left over.
Hey, Scott. I was just wondering, BP uses EOS from Traction, right?
Mhm.
So how has it changed kind of from the startup atmosphere to once you guys implemented that? And then since you talked about McCarthy Capital coming in, did that change it even further after that? Or how has it evolved kind of along the years?
Yeah, well, when I started, it was me, Josh, and Brandon. And so I sat next to Josh and in a little cramped room, and we just tackled every part of the business. There was no formality to it, and it probably would have been a waste to have formality to it, because we're right there. When there's an issue, we discuss it and move quickly with that kind of stuff. Over the years, I think it became a little messy, and we have a convoluted, complicated business, I think, that is unique in a lot of ways from a lot of folks. And so I would not pretend to say that we have a magic bullet for that at all. We certainly got a business that works and is growing and is helping people with those types of things. But I think I'm not 100% certain that I have solved that question about the best operating model for this business. When I took over as president in early 2018, and in late 2018 is when we brought on the investors in McCarthy Capital. When I took over in early 2018, my first thing was to do a kind of simplistic metrics-based organization. You are in charge of that metric. You are in charge of that metric. You're in charge of that metric. And I want them to go up and to the right, unless they're bad for the business, in which case I want them to go down and to the right. And we're going to report weekly on that progress. And that seemed to work pretty well in driving some operational results for a while, until you take those metrics to the extreme and you begin kind of forcing that last bit, and that comes at the expense of other parts of the business, right? Like, hey, you can push people for a sale, for example, but that can be bad for the business. And it's not because we're trying to do anything wrong. It's because my system encouraged people to move their metric to the extreme and not really care about the ancillary things and that were not there. So from there, we evolved to EOS and kind of got a little bit more clear on higher level North Stars that we're not going to take to extremes and those types of things, but are going to continue guiding the business, and then managing the business to 4 separate business lines. We have 4 businesses at BiggerPockets. One is a media business where we have podcasts and videos that people consume, and we make money when they watch our ads. Another is a publishing business where we make money when people buy our books or buy tickets to our events. It's when people pay to consume our content. The third is our subscription business, where people pay for our pro membership. And Dan, I need to get back to you on a college student discount. I know you've been wanting that for years, and you're right. And then fourth is what we call our marketplaces business, where we make money when we connect users with lenders, agents, property managers, and so on. And so that's been very helpful. I think that's a pretty good way to run the business. Sometimes answers to questions are not always like, what's the best way, but what's the least bad way? Because there's always problems there. And now you got your different business lines, theoretically, fighting for resources and marketing and all that kind of stuff. But I think this is a pretty good way to run the business with it. And I'm going to keep a close eye out, make sure we have a strong culture and build towards it. So long-winded answer, but is that helpful?
Yeah, absolutely. It was. Thank you.
Great. I'm sorry if I butcher this, but I have Mihad. Is that?
Yep, you're right, Scott. So my question is that, so real estate is it's a people thing. So what techniques or actions have you done to figure out what people's problem is with their property? Because my idea is like, oh, I just want to solve the problem, and that will lead me to get the property anyway. So what techniques helped you out with that?
For me, I don't think of real estate as quite as much of a people business as all that. I have a much more straightforward approach and longer term perspective on that. I look at it like this. If I buy that piece of property in that spot and hold on to it for 30 years in Denver, Colorado, good things are going to come my way as long as I operate reasonably well. So it's not about solving the seller's problem, because the seller's problem is to sell to the highest bidder. So I guess that's how I solve the seller problem. I make the best offer when I buy the property. Then I place good tenants in the property and maintain the property for a long time and treat everybody fairly alongside that. And long-term appreciation, cash flow, and those types of things occur. And so I'm less of a real estate entrepreneur. I work a full-time job running Bigger Pockets. Periodically, once every year or so, I purchase a real estate investment that I think is going to have a really good long-term potential for my portfolio, place tenants in it, and wait for, let's call it 50 years. It's only been 6, 7 so far. So I don't think I have a good answer to the solving the problem question for you. Real estate entrepreneurs that are going out and finding good deals in the market, like our forums on Bigger Pockets, will be able to give you a much better answer on how to solve those things. And I've observed that, but I've not practiced it myself.
Gotcha. Thank you, Scott.
Absolutely. Leo?
What's up, Scott? How we doing?
How's it going?
So I wasn't able to really form the question I wanted in my head, but I just started my business 2 weeks ago, and it's been an absolute roller coaster of complete highs, complete lows, and I've been learning a lot of lessons on how to control that. But what's your take on a young entrepreneur, real estate entrepreneur? Because I'm starting a wholesale business. So what are your thoughts on that?
Well, I'm going to give a very simplistic answer to it since you're starting a business, which is everything has to be concentrated on generating a baseline of revenue in the early stages, unless you have a financing source that gives you a lot more leeway to think about something longer
Which
term.
I do.
You do? Okay. So you have a wholesaling business that you're trying to get off the ground, and you have a long runway. Is that right?
Correct. Yeah. I have the resources I need, and the model that I need. So it's all in front of me, right? And I'm doing it every day, and it's been a very good pace. It's more my own emotional roller coaster that I'm trying to handle, because honestly, if I just show up every day, it's gonna produce. It's just like being able to handle the stress. That's the main thing.
I mean, if you're starting a business, you're going to be stressed for at least 3 to 5 years, and you got to love it. So I would just change the mindset and be like, this is not a problem. This is a privilege, right? Like I every day I have challenges here at Bigger Pockets where people are not happy with their salary, or not happy with the way we handled a customer interaction, or this part of the site is falling apart and that part is over here, or you invited who to speak at the conference and not me, and all this kind of stuff. And so you can view it as a problem, or you can view it as a privilege. So I think that's one. And then second, you have to prioritize and leave it at home, right? Every single day when I turn off my computer, I am leaving $10,000, $20,000, $30,000 work on the table that I could do, and I have to leave and go home for my sanity to enjoy my life and my relationship with my wife and my friends and all that kind of stuff. And so I think it's kind of setting that boundaries and saying, here's the cutoff point. Here's what I can reasonably accomplish in a day, and go after it. And what am I willing to do? And at first that might be 12 hours a day until I get to a certain point. And then it might be 10 hours. And then it might be 9, probably will never be 8 if you're going to be the owner or the leader of the business. But you can get it down over time. So is that helpful? Am I being useful at all with this?
No, that definitely helps. That definitely helps.
Yeah, I'm not going to sugarcoat there's a way to make the emotional roller coaster go away.
Right.
That's just the deal if you're going to start or lead a business. That's how it is.
Thank
if you
you.
start a
I
lead
appreciate
a platform,
that.
Dan.
Can you say that again?
I bet you that's how it is if you start or lead a classroom, at least in the first couple of years.
Oh, you're asking me?
Dan?
Yeah.
I guess the whole privilege, not a problem. Maybe I forced myself to believe that in the beginning, and then it did become more of a privilege. But the start of that career was there were a lot of problems.
Yeah.
But now it is definitely a privilege. I love that motto. As an entrepreneur, the problems, the stress, it's a privilege to have that, not a problem. Cool.
Connor?
Hi, Scott. I live in a high appreciating market, and I was wondering from a personal finance standpoint, if I'm limited on cash because I'm early in my career, if it's better to invest in my high appreciating market, or if I should go somewhere that has more cash flow.
Yeah. So believe it or not, in 2014, everyone was talking about how much Denver had appreciated and how there's about to be a crash and prices were about to come down pretty heavily. And so I was completely terrified buying my first place. I chose to buy in Denver, Colorado because of the house hacking. Are you familiar with the concept of house hacking?
Yeah, I'm in my first house hack.
Perfect. So my belief was, hey, Denver, Colorado, in 30 years, I'm not going to regret investing here. In 5 years, I might very well regret investing here because, the market can tank tomorrow with all that kind of stuff. You never know with any of that. But in 30 years, even if we bottom out, there's no way prices on a real basis are not higher in Denver long-term than they are today. People want to move here. It's a great place. And so I chose to continue to invest in Denver. And one tool you could use is to serial house hack, because if you're limited on cash, you can just put down 5% on the first house hack. And then after a year is up, refi or use a different type of loan to get into your next house hack with a low down payment. And so that's a limiting factor. And you have to make a decision. Is that more risky to take on debt to that level than to invest out of state in a market with that? I don't know the answer to it. But I think if you zoom out and say, what's the right move over 15, 30 years? And can I sustain any dips in the meantime from a mental standpoint? That might help you zoom out and think a little bit more clearly with it.
Awesome. Thank you.
Abby.
Hi, thank you for coming on. This is super great. So I have a question. I was just wondering kind of what your day-to-day looks like in running Bigger Pockets. And then also too, like if you're financially independent, I was just curious, like what keeps you motivated to run the business and put in all the work for Bigger Pockets?
I'll answer the second one first, and I'll say not every day are you like, oh yeah, this is going to be great. You're like, I got to deal with this one today, and that is not going to be fun. But what keeps me motivated at the highest level is I think that you can have a pretty cool downstream impact on society if you enable the highest potential people, which I would include the folks on this call likely in, because you are using your time to be here on this, learning about this subject. But if you can free up high potential people early in life to not be dependent on wage income, I think those people will go on to have a large set of unpredictable downstream impacts on society that will be very positive. And my best example of this is a veterinarian that we have. And I use this person because she was a Bigger Pockets fan, became financially independent at the age of like 33, and now devotes her career to getting financing to veterinarians. Why is that important? Because veterinarians, you may not know this, they take on a ton of student loan debt, like almost like a medical doctor, and their income is only $80,000, which is not equivalent to a medical doctor's salary. And so there's a lot of suicide and problems that creates in the veterinarian community, and a supply gap, right? There's just not enough. And so Bigger Pockets did not set out to save the horses, right? Or the cats or the dogs, but by enabling financial freedom, I think you can actually begin to solve more and more of those problems at scale. And so that's the big ambition, I think, of the company, and what keeps me motivated is I think we're really doing that to a large extent, and that we're enabling that with more and more people with each passing year in an accelerating tail, which I think is really cool. So the first part of your question, my life is run by my calendar. I am a slave to it. My Mondays I keep free. Actually, that was only this Monday. Never mind. Monday morning I keep free until 11. Then I usually have a podcast or some large event there. I take care of a couple of all of my board interactions happen on Monday, shareholder and all that kind of stuff. In the afternoon, I block for strategy. Tuesday mornings, I record 2 podcasts from 9 a.m. to 1 p.m. Then I have the evening on Tuesday for the other things that come up. This week, we're going to have a voice of the customer meeting, and then I have a financial review for the month when we close the books. Wednesday, I have all of my one-on-ones with all of my team members, and I have our senior leadership team meeting. It's just meetings all day long, and I get them all done in one day for those. Thursday, I do all the things that are kind of like odds and ends around the business. Like I have a couple of people that report to me now, but might not report to me in the future when we hire certain leadership positions. I have those folks come in there. I guess today I have this call, and I have a lot of meetings that I schedule for the week in Thursday afternoon. And Friday I keep almost completely free for strategy work. I meet with my boss at a coffee shop and we go at it. My boss being the chairman of the board. I have weekly with him, and we go at it in this coffee shop over various issues. And then I have almost the whole evening most Fridays to work on the most important things or strategic work. And I repeat and repeat and repeat.
Thank you. That was so interesting to hear that, for both answers. So thank you.
So I leave a lot of time to work on the most important thing, but I also have a cadence, kind of similar to that formula and opportunity, I guess, that I was talking about earlier.
Hey, I'm gonna jump in here, Scott. I want to do a screenshot of our meeting here. Mm-hmm. So and maybe some other members will do that as well. So we can all put a nice smile on our face for a second. And then I'll count to 3 for a screenshot. Here we go. 1, 2, 3. Awesome. All right, back to questions.
All right, we got Sarah.
Hey, thanks for taking the time to speak with us today. So my question is, how has your mindset shifted from being like more of an employee and a worker to being more of like a leader and a manager? How do you like kind of balance those two? Because you were talking about working really hard and just being in that grind when you're trying to grow the business, but then once it's grown, how do you continue to scale while also like being able to have that oversight, that like 30,000 foot view of leading?
Interesting. If it's been there was never an event that took place to make that shift. So if it's been a shift, it's been a continuum over a long period of time. And I don't think fundamentally things have changed for me. On day one, I stuck my hand up to solve every problem that I could at the business. And on whatever day it is now, coming up on my 7-year anniversary here, if there's a problem at the business, power not working for the coffee machine, I'm going to go and fix the circuit breaker with that. And so I think, and I'm not going to, I would say that mentality has really not changed in any fundamental way. Perhaps a better way to kind of articulate it is I have to be more conscious of the value of my time with those types of things. So for example, fixing the circuit breaker is not a good use of time, except for that if I don't get my coffee in, I might make a bad decision, and that's the only way to get it this morning. But I shouldn't do that on a regular basis with this, right? Like that would be a terrible use of time in a general sense with this. So I need to solve that kind of problem and not do that a lot. But creating a PowerPoint presentation, right? When I create PowerPoint presentations previously, I would spend a large amount of time making sure everything is perfect, checking it for typos, all that kind of stuff. Now, I create the PowerPoint presentation, get to its essence, get all the things I need in there, and then ask other team members to update and populate and double check and do all of that diligence work to make sure it's there, and then do a passover at the very end with it, because that's a much more efficient use of time. So I think, is that useful from that perspective? I don't think my personality has changed. I think it's been, my style has changed that much. It's just the way I value each moment, I guess.
Yeah, so it's more time management. Like, it was really interesting hearing about how you block things out on your calendar and kind of plan your flow like that way. Like, I think that's probably a really important part of that too, is just valuing your time and managing it well.
Yeah, and like my time is worth something to me. Here's another mental model. Maybe my time is worth a couple $100 an hour to me, because that's what I get paid across all of my assets and my salary and all that kind of stuff. But to the business, my time is, at least theoretically, worth the average monthly increase in the value of the overall business, right? So it's not the profit. It's, let's say that the business is worth $100 million. If it is going to be worth $103 million next month, my time is theoretically, at least potentially, in that ballpark of like 3 million divided by the number of hours I work in a month. Now that would be an extreme example. A more conservative one would be to say some portion of the profits or whatever. But you have to kind of think like that and zoom out and say, no. Even like hiring a $300 or $400 or $500 or $700 attorney to solve this problem that I probably could do a reasonable job on is still a good investment. And that is weird. That is not something that you're like able to really kind of digest at any point if you have any, if you're not like, I guess, really conceited. It sounds arrogant what I'm saying here with that. And it's very strange, but I think that's what like my boss tries to get me to pop out and think around those types of things. And so that's the biggest shift is thinking around that. From a leadership perspective, I'm just a zealot and missionary for the business. I told you purpose here is to do this, I told you how much I think my time could be worth. And this is my most valuable use of time is this, because this is in pursuit of the mission, is helping you guys figure out how to advance that financial freedom just a few more moments or a few more years or whatever, and enable that. And so that's, I think the leadership thing is just live and breathe what you preach, I guess. But also, I don't know if I have it all figured out as a leader, so still learning there.
Thank you.
All right, Jackson.
Hey, Scott. Thank you for your time. But I was wondering, how do you stick to your goals? I mean, my long-term goals don't seem to fluctuate, but it seems the goals I have to get me to that long-term goal, every time I sit down with my business partner, it's like, oh, what if we could do this? We could do this. And now it's just like we have a bunch of things that we want to do, but we're kind of trying to figure out how to hone in on one thing.
Yeah. If you ask anybody on the team here, they will definitely tell you that I have shiny object syndrome at all times when it comes to that kind of stuff. So I think that's a problem that a lot of people have, or at least that I have, maybe. So I think it's a lot of people. But I think I don't know the right answer to that other than to kind of use that goal setting process, right? Here are my annual goals. Here are my quarterly goals. Here are my weekly goals. Here are my daily goals. And if you find your goals changing midweek every week, you're probably changing them too much. If they're changing mid-month, that may not be too much, especially if you're in, if you're not crystal clear on a couple of things with that. So here are two potential tips and tricks to help you with that. One is, like I said earlier, embracing the cheese that is the goal setting world there and going down the visioning path with it. I use the cheese because I always thought it was cheesy, but I get value out of it. And that's, I'm going to put together a half-page vision. Like, what does my day-to-day look like? What am I doing? Where do I wake up? What do I see when I look out the window? What kind of work do I do? Who do I do it with? How long do I do it? What kind of problems am I solving with all that kind of stuff? And then I populate that, and then I edit it whenever I feel like. And over the years, it has stopped moving as much, and it's gotten stable. And so my wife and I now do it. Now that I'm married, I make her do it with me. She seems to like it. And now it's stopped moving, and so it becomes much clearer, and the goals move less, but the tactics are always going about wildly. So I don't know. Does that answer part of that question?
Yeah, it does. Thank you.
Yeah. So coupling that with the goal setting process can give you a little bit more of a beeline toward where you want to get to. Jabbar, did I pronounce that right?
Yes, sir. What's going on, Scott?
How's it going? And thank you for waiting patiently. You're the last one, so I appreciate it.
Last, well, I'm trying to have the number one question or something because it's a competition.
All right.
So my question is more so on the line of like finances, right? So like I'm struggling to see. I like background. I love real estate. I'm like trying to be all in on real estate. And like I start with stocks. And so like I know diversification is super important, But like, it's a struggle for me to like decide when I'm talking about asset allocation, like putting like trying to set aside more towards like, that stock portfolio, more so towards real estate, because it's like, I feel like I'm just leaving so much on the table when I'm like diversifying into stocks. I understand it's about like wealth preservation, but it's like where I'm following on the lines of, do I kind of like try and have like a balance, like total net worth between like stocks and real estate and all that stuff? Or can I like just focus on diversifying into real estate? Because like I look at stocks, it's like these single digit returns. And when I look at real estate, I'm like seeing double digit returns. And obviously you have to have cash reserves. So I'm already kind of like thin on that end. And like from a goal perspective, it's just like, I know I'm going to achieve wealth and accumulate wealth and all that stuff. I know I'm going to hit that level, but I'm just wanting to make sure I'm being strategic about preserving the wealth that I'm building. And so that's kind of, I'm just trying to see like insight on whether it's wise. It could be wise for me to like just focus on diversification into real estate rather than trying to delve into other asset classes, because I know that's traditionally the norm.
Yeah. So here's how I thought about it at 23, and here's how I would think about it today. It's the same concept with it. When I was starting out, I had $3,000 in cash in August 2013, like I told you guys. And at the end of 2014, I had $20,000 in cash. I might have had like $3,000 in my 401k or something like that. Instead of diversifying, I put $12,000 down on a $240,000 duplex. So I have $240,000 asset, highly leveraged in real estate, and $3,000 in my 401k is my position at that point, right? There's no diversification in that situation. I don't believe in diversification for someone who is just getting started out. If you want to maximize your potential and become financially free early in life and go after that, you have to concentrate resources. Diversification guarantees you a mediocre return in those early years. So if you're investing to achieve financial freedom, you have to concentrate at some point on a resource or on an approach that you think can get you ahead. And then when you cross the couple $100,000 in net worth mark or begin approaching $1 million, you begin layering in the diversification, right? Because now you're trying to protect something. But when you have nothing to protect, I don't think there's, and when I say nothing, I don't mean this nonchalantly, but I mean like, hey, like the goal is not to get to $100,000, right? The goal is to get to $1 million or hundreds of thousands of dollars and thousands per month in passive cash flow so that you guys can go out and not depend on wage income, right? And in pursuit of that goal, the first 100,000 isn't really that important. And I don't think you can afford to diversify unless your income is super high. So if you earn $200,000 a year, you're going to earn $200,000 a year. You can just save and invest in a diversified portfolio and you'll coast to FI in pretty good time if you keep your expenses under control. But if you're earning $50,000 or between $30,000 and $75,000, which I imagine many folks out of college are earning, I'm not sure what anyone's income there is, but I think you're going to have to make that hard choice and be like, I cannot max out my 401k and my Roth IRA and buy a house hack and start a business here. You have to make a choice. And that choice, I think, has to be for that highest and best value activity. And there's no right answer there. And everyone's going to give you a different idea. For me, you know what I did? I put it all on a house hack duplex for reasons I thought were strong. And that worked out for me. Maybe it doesn't work out in the next 5 years because of market conditions or whatever. But I still think that's a pretty good bet. What that right bet is for you, though, I think that I think you're going to have to figure that one out. Is that helpful?
No, that does help. So I'm going to diversify into real estate then. Just stick with it.
Yeah. But I would think you can't diversify and build wealth rapidly unless you've got a huge income source or a huge gap between your income and expenses. If you want to use your investment approach to drive returns, you have to concentrate resources at some point, especially in the early days. And that is hard and it's scary. And I got no sugarcoating on that, but it's a reality. So great question. Oh,
Thank you.
guess we do have two more questions. I've got Wyatt and Mihad.
I already asked the question, so only if we have time.
Well, Jabbar, I see you still have your hand raised. Was another part to your question? Did I move on too early?
Oh, sorry. That was just me. I forgot to put it down.
Okay, well then let's go with Wyatt. Your next question here.
Yeah, so my question has to do with managing to growing and scaling your real estate business while still working a full-time job. So like a little bit of background about myself is in the next couple of years, I'm going to be starting off in public accounting, which the pay is good, but what comes along with that is like long, like regularly 60-hour work weeks combined with also studying a couple hours every single day for like your CPA exam and stuff like that. So I'm not going to have much time. And I'm currently working for only 40 hours a week. And I'm seeing that it's a lot harder to manage my time to make sure I set time aside to focus on real estate and learning about that stuff. So do you have any tips on time management skills to work on scaling your business while working long hours?
Well, I think that I'm going to use that phrase I used earlier, privilege or problem, right? It's almost impossible to invest in real estate or get started investing in real estate without a job, right? You're gonna have to leverage to the hilt or borrow someone else's income to get the loan, to get access to the loan. So almost 90% of single family rentals in this country are owned by people with 10 or fewer properties, and 50% are owned by just people with just 1 or 2 properties. These are not retired people that own the property. So everybody is in the same boat as you. And at least at first, when you have a handful of units, you should be able to manage those as an extracurricular. I would think with your job, even if it is 40 to 60 hours a week on and that kind of stuff. You need to be able to, every once in a while, the nature of the real estate is going to be a pain in the rear, and you're going to get a call from somebody who wants you to fix their toilet at an inappropriate time during your workday. And you're going to have to go ahead and figure out, like, I'm going to delay on that for a couple of hours while I get the necessities done, and then I'm going to call a plumber and do that. And the price of that, or the reward for that is potentially tremendous amount of wealth in excess of other investing alternatives. So that is, I think, just a trade-off you're going to have to make there. But I would just reframe it and say, you're not in a unique boat with that situation. Almost every investor, at least, the majority of them that I've met, start out in the same circumstances, and that your problem will compound over time. Last framework on this is you can think about that time value of money that I was telling you about earlier. Right now, your time is worth $25, $50 an hour, making that up, right? But it would be $25, you're making $50,000 a year, $50 an hour if you're making $100,000 a year. So that time value of money is going to expand over time. Right now, it's probably worth it to do the hustle and manage the property yourself, even as, in the first for a couple of units. But as the years go on, you build a bigger portfolio, your career advances, maybe your time gets to $200 an hour. Now it makes sense to hire a property manager rather than do it yourself. And so you have to be kind of cognizant of that. The movements of what works today will not get you to a scaling position, but is what's necessary to get into that position. You're gonna have to rejigger it at that point.
All right, thank you.
Absolutely. I do have to stop because I have a one-on-one after this with one of my team members, but I really enjoyed the questions here. I'm sorry, if you have additional questions, they can email me. You guys can email me at scott@biggerpockets.com, and I'm happy to take those, but I do have to run here, unfortunately.
All right, Scott. Well, thanks so much for your time. Really, really appreciate it. And yeah, can't say enough about how generous you are. So get to your other meetings, get your time management going, and we'll talk to you soon.
Guys, thank you so much for the great questions and all that. And and seriously, my email is open at biggerpockets.com is how you contact me, and would be happy to do it. Thank you for everyone having such great questions that were really intelligent with this. That made it fun and put me on the spot with a couple of them. I appreciated that.
Hi everyone, if you like this video and want to see more like it, make sure you give this video a thumbs up and subscribe to our YouTube channel. You should also go check out our website and Instagram, which are both linked below this video. Thanks again for watching. Now go and get your freak on.